Hello guys, glad to have you on board again. Today we do a educational content today. I submitted a question to you guys for a voting system, and you decided to pick up what I expected you to pick up anyway, is how to manage risk in position. Because that's a rising concern regarding the users. I've received quite a lot of messages recently regarding this topic, and also on Discord. So yes, I wanted to submit this throughout the options I gave you to vote for, because I thought it worth the try to dig a little deeper into this specific area. There are some misunderstandings, and obviously we need to flush them out. So from what I can tell, and regarding the messages I had, I think some of you guys have troubles with range risk management, and this one really is the easiest one for me. So I'm going to spend much of my time today explaining you how to risk manage in trend, because this is another area of concern, but this one is way more complex to explain and for you to understand. So if you have troubles risk managing with trends, then that's absolutely normal, because that's the most complicated. I know most of the so-called coaches guys in YouTube or whatever will tell you trend is easy, range is complicated. It's actually the opposite. Just like most of trading is, every time someone tells you something, tells you that this is easy, it's generally the opposite. So the reality is that trading and risk managing in ranges is way easier than doing it with trends. Even though trends, when they are the most comfortable condition to trade, because obviously there is a trending in the market, so you can have decent position sizing with low risk. Yes, that's true. That is definitely true. But the thing is that risk managing on trends is way more difficult for a single reason. You hardly can get yourself some targets in a trend that you can in a range, because a trend, you don't necessarily know where it's going to stop. All you can do is speculate on maturity of the trends. And therefore you're going to apply some risk management according to what you expect to be the next movement. So I'm going to explain all of this later, because it requires a little bit more understanding. I'm going to start with the ranges, because that's the easiest part of it. So in order to understand how ranges works, we're going to use the PDF manual as a support. Alright, so here we go. Here's the PDF manual. We're going to go straight to the interesting area. Alright, so this is the stuff I told you, that if you're learning my strategy, please print that and take it away. Take it always with you, right next to your computer. Anytime you're pressing a button, you need to fulfill all those rules, and at least most of those rules. All right, you can take a little bit more risk by shifting or bending some of those rules when you'll get more comfortable with the strategy. But when you're just learning it, I know it can be exhausting, because just here and there, just one tiny little bit of a condition won't be met, and you would like to take the trade anyway. If you do it, you're just not applying the strategy, and I want you guys to learn how to apply it all by itself just first, and then you'll be able to eventually bend the rule. But if you don't get it all just like that, as I give it to you when you start learning, then you might trade more, but you'll trade far less quality, and that's exactly what you should avoid. So anyway, what this thing does is exactly this. It tells you how to risk manage, both how to risk manage to get in position, all right, which is this area. These are the in position entry conditions. These are risk management conditions. How do you risk manage in ranging, trending ranging, and trending structures? Excess and bubbles, like I told you, these are the most complex. So this is why those ones, I don't want the beginners to get their hands down there. I'll teach you how to trade this as we guys learn along together. So I'll teach you throughout Discord, I teach you throughout the daily videos and stuff like that, but you must not focus on this. I know this is what attracts most of your attentions, the bubbles, whatever. Yes, like cryptos right now is, oh my god, yes. S&P right now, oh my god, yes, because that might be a bubble. But that's the big problem. This is exactly what you should nearly be trading. So we'll see, all right, but excesses and bubble, we're not going to talk about that today as well, obviously. So the ranges, how does that work? It's really, really, really the simplest stuff to do. All right, when you got yourself in a range, I hope you do understand how to get in position. We're not going to be talking today about this right now. All right, let's take a range, and what you're going to be doing is that anytime you got in position, all right, it's going to be a simple switch, what I call generally the black box. All right, you got in, which means at this stage, think about the Schrodinger's cat. You don't know a goddamn shit about what's going to happen next. There's a price area in which anything that happened is worthless for you to have a look at. It's the black box, because once you're in position, you made a decision. You need to stand up for that decision, which means it has only two options. Either you're going to be a validation or an invalidation. Anything that happens in between, just for the dumps to talk about. Price can go a little bit higher than your selling entries, or price can get a little bit lower than your buying entries. Who gives a shit? All we care about is for you to be validated instead of being invalidated. Now let's take a quick example with real markets. So we're going to take the SPX. There's nothing better than the trending we've got in this one. So let's take a ranging context instead. All right, then here we had a nice range. That's the one I used for the French users as well. So all right, let's get back in here. Remember that as I give you those rules, like 76% retracement, that is for beginners, because that requires you to be at least able to draw those Fibonacci, which means you need to have a top and a bottom. You need to have the first two boundaries of a range. Right? That's another question I often get as a concern. How do you calculate the range boundaries? As simple as that. Anytime you go from one context to another is exactly what we call a range boundary. So in here you've got a top boundary, which is a final excess, and there you've got a first pullback. So this is the first range, the first two ranges boundaries. At this stage, you'll be able to put your Fibonacci's, all right? And we're just going to move on a bit. All right, there. Sorry. A little bit too fast. Come on. Well, all right. Though the Fibonacci's have been setting themselves automatically down this bottom up to this top. And remember that even if you don't know which Fibonacci is, we don't nearly give a shit. All you care about is in a range. You never trade unless you're there or there. You trade outside of Fibonacci. Inside Fibonacci is for the dumps. All right. So you wait for those areas to trade. This one's already been traded, so you're going to trade the next boundary into the resistant area. So first of all, you wait for prices to get there. All right, that's this rule. 76% retracement at least. So now moving on. All right, conditions not met. All right, we start meeting the condition, at least quite almost reaching it, but still beyond the context, which means this is nothing you want to trade. You want to trade on top of context with at least 61%. So now you've made 76%. You want to go up to the resistant context. All right, as you can see, it takes quite a lot. All right, here we are. Sorry. So here we are. Look how long it took. We started in here like 25th of April. And we ended up having the trade in October, in September. And in here, we still don't know if there is a trade, all right? You need to be outside of context. So that isn't nearly a trade, all right? We need to go further than that. All right, there I think we're going to get something. All right, what, did we have a signal? Yes, we had an exit. So this is where you trade. Outside of context, reintegrating, red arrow, stuff like that. This is where you get your first range trade. And yes, it took a freaking long time, to get there, all right? Yes, it was long, and that's what trading is about. If you're not patient, you're going to end up fucked. So it's a selling entry, all right? Next rule is, if you don't know where to put your stop loss, remember that in a range, there is an easy way to do it. You can take the trend channel size. All right, so you take the width of the trend channel and you put your stop loss away from the top. All right, so either from your entry price, but as in here it's a very narrow, I would suggest you put that on top of your high prices, all right, of the highest price. So that would give us a stop loss of this, approximately there. All right, so now we move on. All right, we get to do this. Oh, sorry, I went a little bit too fast. Let's move back in time. Right, so in here, what do we do in here? Let's zoom it. you're gonna get, this is the first in position risk management. Alright, so you got into your neutral range, you took your trade, validation or invalidation. Invalidation means accelerating off the trend channel with a bar close, which means we would have to go there and break it up, like closing sharply off the resistance trending channel, right? So like going there and bang, big candle close outside of this channel. I'm gonna give you an example of what this is, because obviously in trend that's exactly what we do. Like bam, big beautiful candle closing outside of the resistant context, which is in here, the resistant trend channel, right? That is exactly the kind of candle that really looks like an invalidation if you were selling, all right? So it is pretty much like invalidation is in this area, or the stop loss, all right? And validation is reaches the opposite side of the trend channel. So this is just there. So now we just entered here like 29.22. We're here at 28.81, 91. So we just got barely 30 points in the pocket. The trend channel was so narrow in here that when these things happens, there is one rule you need to understand. There you can bend the rules. Like profit taking in here or risk managing in here doesn't even nearly worth the shot. Look at this, all right? The stop loss is in here. You would be risk managing even halfway through the size of your stop loss. So that's not how you do things. When you've got this, you can bend the rules. Either you put it, you'll automatically do your first risk management according to the stop loss sizing. That's one rule. So in that option, you're going to do your first risk management in here. All right. Option number 2 is the one I use personally in those cases. All right. When the first risk management is too close from the entry price, I just skip it, which means these lines, all right, the validation action, instead of performing them whenever I reach the trend channel, I'll do it when the confirmation will be met, which means reaching 50% of candle, reaching the opposite 50% of the context with a candle close. All right. And in that perspective, I'll do this instead of that, and that I'll not do it, all right? So we've got multiple options. Like I said, the first risk management there, but it's very tight in price area, so you can do it approximately to the size of your stop loss, all right? All right, we know the second risk management area is going to be in there, all right, with a maximum of 61% retracement, all right? I should be adding this in the PDF manual, all right, because the confirmation is 50% of the context or reaching Fibonacci 61%, to be precise. So anyway, your target number 2, which is your second risk management area, is worst case scenario there, but in the current time, we've got a 50%, I don't show this area anymore, but you can put it in motion, like 50% context, all right? So in here, the 50% context in here. So if we cross that with a candle close is where your target number 2 risk management gets to be done, all right? So either you skip target number 1 and you put it there and there is no target number 2, that's what I would do, all right? Or you do it that way. So I forget about this risk management, too close from entry price. Either you risk manage there or you wait for the next confirmation to do it. So we know how this happened. All right, so in here, candle close below 50%, you're fine. All right, that's about time. Sorry, let me just delete that. I don't need that information. All right, so you've secured your trade. First profit taking has been done. What do? You risk manage like you would do, which means depending on your risk management or your risk assessment, if you're low risk profile, you get to take 50% off the table, pay for your stop loss, 25% for moderate profile. Aggressive will just put a stop loss at break even. Very aggressive will just do nothing or reduce the stop loss sizing. All right, so you had your stop loss in here. If you're a low risk profile, you're going to take 50% off the table, and you're going to make sure your stop loss is paid, which means, all right, consider that your profit took in here, right at the candle close, all right? That means out of your entry price, you made 150 points, all right? You're taking 50% of this off the table, which means you have approximately 75 points available in the pocket to finance this stop loss, which means your stop loss must be set at least at 75 points away from your entry price. So in this case, you will reduce your stop loss in here at least You can put it anywhere below, that's fine, but it's at least being paid. All right, that's a minimum requirement. If you think you're confident enough to put your stop loss in there, that's fine. That means the 75 points you paid with, you just profit took, are already in your pocket. And if we go retrace back to your entry price, you'll still have them. All right. That's a minimum condition. When I said stop loss paid, which means your stop loss must at least be paid. And if it's not, you move it to an area where it's paid. All right? Calculate how much you took, calculate how much your stop loss cost you, and it must be at least equivalent or lower. All right? So, next risk management area is nothing, because we skipped the first one and we performed it in here. Now, what is left for us? All right? We went to validation instead of invalidation. Then we went to confirmation. That's fine, instead of stop lossing. All right? So instead of taking our stop loss, the market went to confirm us. The next step is limit trade. All right? At this stage, it's still a binary choice. Either the market will take down my stop loss, or the market will reach out to my limit, which means I go back there and there is a final profit taking mandatory at 76% fib. If we go there, you profit take the entire position sizing. You don't go any further. You targeted a range. You don't know if this range is bullish or bearish or whatever. So all you're going to care about is go in there, profit taking, and get the fuck out. It really is simple as that. And look at that. Bam. How beautiful is that? You're profit taking entirely. What happens afterwards? Who gives a shit? You shouldn't really care about that. What you care about is that you're in a range. You just trade smart instead of trading like forecasting the future, trying to figure out where the range boundaries will be. In here, that's fine because it went pretty fast. But it could have taken all along just that long to get there. And it wouldn't have changed any goddamn thing. That's exactly this. In a range, you don't forecast anything because you don't know anything. It's hard to say how long it will take. It's hard to say if we ever will get there. All you can tell is that these are the areas in which you want to risk manage. Simple as that. All right? So that's how you range manage. It's pretty fucking easy. Now, how you get to manage trending range, it's just the exact same structure. Instead, the target will be changing. All right, the first target will be reaching out the context channel and breaking beyond it instead of 76%. All right, but it is exactly the same old stuff. Just a few alteration because we're gonna have a trending direction to follow. But that's it. All right, it's just the conditions are less brutal than in a neutral range, but it's pretty much the same stuff. You get in trade, it's either validation or invalidation, all right? Then it's either going to be confirmation or stop loss hunting, and then you get to hit your target or your stop loss. Basically, think about it as a diagram of options, all right? So think about it like, all right, you get in position. So entry, all right? This is your entry price. What happens out of an entry? I shouldn't be doing this. Alright, yeah, well, I'm going to use that anyway. So, out of an entry price, no trend line, so I'm going to use this ugly. Alright, so you've got two options. Out of an entry, it's going to either be validation. Oh, sorry. Validation or invalidation. Or a stop loss, all right? Invalidation, remember what this is. You need to accelerate off the trend channel, all right? So it's either a manual invalidation because things get out of control, but with clear technical information, prices are breaking through the trend channel and the context channel. You're allowed to get the fuck out prior to getting to your stop loss, but that's the only condition, all right? Otherwise, you just let it go and you wait for your stop loss. Then, after those two conditions, what you're going to get is, if you're validated, the next step is either you get to confirmation or you get to stop loss. Alright? At this stage, there's no more invalidation. Normally, your stop loss must be targeted before the actual price breaking through context and stuff like that. So normally at this stage, there's only a stop loss. That's an option. All right, if you get confirmed, that gives you another set of options. all right, which is limit or the stop loss. That's your decision-making process inside ranges. That's pretty fucking simple, all right? Anytime you get to the next area, is going to pick the same binary choice. These are just binary choices that doesn't depend on you. The market will make the decisions. In ranges, most of the time, you'll get there. In ranges, most of the time, you'll stop there, which means this is, you'll mostly get to confirmation, and then 50-50 is going to be limit or stop loss. But anyway, when you reach out confirmation, there is no loss. There's always a gain back in the down the corner. So either that's a stop loss, but normally you already profit took, or that's a limit, and you're going to take a nice and easy gain in a range. All right. Rarely you're going to fail at validation, which means entry price getting straight to invalidation. That's rare, but still it will happen here and there. Most of the time you'll get to validation, which means normally when you get validation, the stop loss costs you shit. The stop loss is paid, which means most of the time in ranges, you just take no loss. That doesn't mean you're going to take crazy shitty gains. It just means trading in ranges, if you do it fine, if you do it right, just brings a very low probability of taking a loss, but significant probabilities of getting at least a tiny gain or a very nice gain. All right? You're not going to get to the limits each and every time in a range. That would be too big. That would be too easy otherwise. But you need to understand that ranges is meant to take some easy money, not necessarily big amounts of money. You're going to take tiny position sizing, low risks, but those trades generally will bring you gains, or at least have very low probabilities of taking you a loss. If you respect the rules, just try bending the rules and it will not work at all. All right? Let's just bring us back to this example of the SPX. Like, if you said in here, all right, I'm fine, I'm taking this trade, instead of breaking through context, which is a mandatory rule, you decide to bend the rule. You say, all right, you know what, I'm selling in here, and fuck Phil's rules, all right? I'm selling in here. So you would be lucky because you will have reached out to the trend channel, which means you'll have validated the trade and took no loss, all right? But you will have been stop lossed afterwards, all right? You understand that? Because this rule doesn't fit the manual, all right? The manual's rules are clear, and if you try to bend them, this is not going to work. Anyway, so that was for ranging. Now we get to the ugliest part, trending, the one you rarely or most likely understand far less than the trend, the ranges. That's understandable. These ones are complicated. Like I said, trending and managing in trends is the most complicated because that's things you will understand and pretty much master in the future as you'll get more comfortable with the strategy. But still, at the beginning, trending is the most complex stuff to understand with speculative strategy. So how does that work? You need to understand one thing, is that trends generally follow the same path. So if you call that Elliott wave or whatever, like I told you, it's generally looking like that. A trend generally does this, right? A motive sets of wave in which this support is higher than this resistance. So this is what we call the trending area, right? The area in which there's only one side trading. We don't overlap the support and resistance. There's an area in which prices are increasing in a directional manner. And we don't retrace this, or we retrace this later on eventually, but there's not necessarily retracement of those areas. All right, this is the trending part of market. In those structures, there are generally swings. What we care about in a trend is not how to perfectly buy. No, we don't care about that. We care about trading the swings. So what swings do we care about? We've got these ones, all right? So I'm going to use the other tool instead. I'm going to use this one, all right? Sorry about that. All right. So we care about, for example, this swing, sorry. So there is this one, this one, this one, this one, this one, this one, and this one. These are all the swings we can profit from in this trending structure. So what is this? Remember that the rule for a trend is to have a matured range. So generally this means this is the mature range boundary, generally the fourth range boundary. So the market is ranging prior to this. We get to the fourth boundary. Every beginner doesn't nearly get to trade this. Only professionals can trade more than 3 range boundaries, and beginners generally only do trade the third one. like what we said earlier. You need to wait to have the to have the Fibonacci set it in order to be trading the 76%. So you're generally going to be trading as beginners only the third range boundary and no more than that. All right. So this point in here, you're not going to get it. If you're a beginner, don't even think about getting this one. The range will be mature. You're not going to be trading it. Then, all right, comes the point number 2, which means normally the range is mature. We're getting back to resistance context, and we're going to look forward for the first trending step, accumulation. All right, accumulating the market. Oh man, yeah, I can't get the fuck out. So, sorry about that. I'm going to have to. No way, I'm going to be putting those numbers back. So that's, I think I can let them on the chart. Yeah, I can. So that's the manual. Come on, babe. All right. Oh, sorry, the numbers are still there. So anyway, accumulation, which means anyway, in order to take a trend trade, these are the entry conditions. So these are prior conditions to get into any of those trades. Minimum 23% retracement, 38% recommended for beginners, so that's a safer rule. Near the trend channel, that's absolutely mandatory. You're not trading anywhere. You need to trade at least at the trend channel, and then you need a colored signal plus a triangle. What do I mean by colored signal? Is this, all right? The blue signals for bullish trends, the red signals for bearish trends. That's absolutely important, all right? So point 1, you can trade. You cannot trade. Point 2, you cannot neither, because that's still in a range. The range is still mature, and you just got from support context to resistance context. All right. That just means at this point you're waiting for the time that will start accumulating. Accumulation states by going from trend channel to context, which means we go from one context to its trend channel, and we go back to this context instead of going to the opposite one. In a range, we're going from context to context. When we're accumulating, we're going to go from context to trend channel instead of going to the context. That's what you need to understand. All right, so that looks like that. All right, at some point, the point 3 is going to be an accumulation, because instead of going back to the context, we're going to go to the trend channel, and the trend channel will push price back to the context. This is the pattern I generally tell by context trend to context. All right, this is typically what an accumulation looks like. So the third point, you can eventually trade it if you're at least a little bit of experience with the strategy. Otherwise, if you're just beginning, don't even try to catch up accumulation. What you care about is that the accumulation is eventually preceding the breakout. And this is what everyone can trade, beginners or whatever. This is what you care about. This is the trend ignition. All right, this is the trend preparation. This is the trend ignition. Everyone trades this. Only a little bit more experienced traders, like I said, 6 months. The green guys can trade that. No, the white guys, you get the fuck out of trading accumulation. Too risky for you. At least you can try, but you try with very, very low leverage just to have a glimpse of risk taking, but no more than that. So as a beginner, you can take 3, 4, 5 is not a trade. 5 is a divergence. So if you have a look at the PDF manual, 5 is a risk management area, which means it's a profit taking. So in here, there's no trade, right? You don't sell this area. God damn it, no. So many times you would like to sell this thing, like because you missed the breakout, you want to sell the divergence. Don't do that, all right? You don't go counter trendy. What you care about is most likely buying the goddamn pullback, all right? Which is 0.6, which is an entry price, all right? But the low risk profiles will not trade that, all right? The beginners and low risk profile, please don't do this. You don't trade the pullback. And wave and 0.7 is final excess, and that's as well a risk management in which you profit take. So if we sum up the informations we have in here, all right? So this is, if you are just a straight beginner, you just start learning my strategy, you cannot trade this, you cannot trade that, you cannot trade that. You'll only trade this up to this straight line, because there's not going to be intermediate risk management. You're not going to buy this dip. So there's just one trade in the trend. You get in the breakout, you let it go with the divergence, you partial profit take in here, and you're going to take it straight to the final excess. All right? This is for beginners. Now, a little bit more experienced traders, those who understand my strategy and stuff like that, will be able to take a little bit more risk. These guys will start looking for this third point, they will trade this straight to fifth point, and they will reinforce from 6 to 7. Right? These are a little bit more experienced trader. And when you get to be professional, you really master risk management, you get orange or at least yellow or orange, and you'll be able to trade mature range, which means you'll take this trade leading to point A, you'll take this trade, you'll not take this trade. This one I generally don't take it, right? I don't like, when I see the range being mature and I know that I want a bullish breakout, I generally stop selling, but I'll get obviously to buy this, right? And then, so as you can see, if you get mature, you're going to trade a lot more than when you're just a beginner. But still, if you try to cross the steps too early, you're going to end up taking way too much risk, and mostly risk you cannot handle. So please don't try to cross the steps too early. Focus on learning the strategy all by itself, and even if that means you're going to lose and miss some of the trading action, who gives a shit? What you care about is making money and with low risk. And as you cannot sustain risk taking when you're just a beginner, just understand that you're not going to be really profitable. What you should care about is just limiting as much as possible the losing case scenario. All right? So that's how we do trade ranges, and that's what we care, trending, that's how we care about those risk management. So remember that divergence and final excess are risk management, so you only profit take in those areas or move the stop losses. The accumulation, breakout, and pullbacks are trading entries. What does that mean? Let me show you. We're going to take an example right now. So, God damn it, I'm going to make it. All right. So let's take the example of the most beautiful trend on earth, the S&P 500, obviously. So this is a clear bullish trend. So where would it be for the accumulation? So first of all, we're going to take the mature range. All right. So in here was definitely an ugly pullback in a range, but still this was a range. All right. So mature range. Remember context to context to context. So in here, where would it be? Our range boundary would be there. All right, we tried, but still it hasn't been retracing up to the resistance. All right, and support. So fourth range boundary, mature range, so we can start forecasting the potential trend accumulation. All right, I hope you do understand that. So we look forward for accumulation. What is the first thing we need to validate this boundary and make sure we're not going lower? All right, because the thing is that in a range, you don't know the boundary unless you get to the opposite context. All right, we could have done this and this. All right, but we can confirm this boundary when we get there. All right, we get to context. So let's use the replay. I hate when we see what happened afterwards. So remember the rules, all right? In order to get into this trade, the accumulation needs you to get back to the trend channel. So when you're there, first of all, you hide the goddamn momentum. You don't need to have a look at your signals at the moment. All you care about is for you to retrace back to this goddamn trend channel. As long as you don't, there is nothing you can do. Oh, and we don't. Also remember that you need at least 23% Fibonacci. All right, there we go. There we've got something. All right, remember that you need at least 23% retracement. Remember this rule, all right? Always 23 and 38% for beginners, all right? You need to be close to the trend channel, and you need to have a colored signal plus a triangle. Now, let's get back to this. What do we have? So, close to the trend channel, yes. 23% Fibonacci retracement, or 38, yes. You need to have a blue signal and a triangle. So in here you've got the blue signal. You're not gonna get the triangle yet because the price is still okay. This is an algorithm problem. This is something I'll eventually update in the future. in here you would have had the blue triangle, but you couldn't because there was still prices, the early candles were still in the resistant context, and that's overcoming, right? It's because we retraced way too fast in here that it didn't trigger the price, okay, to turn up blue. It would have been just a few candles after, and it's just some algorithmic protections that are messing up with each other and that just cancel the signal. But otherwise in here you would have had the blue signals, obviously. So in here is exactly what we're looking forward for, a goddamn trend accumulation candidate. Remember that in order to take this trade, all right, you're not gonna take the trade into the weekly context. You'll always take those trades in contexts, which means you're going to have to take this trade in a daily chart, all right? So let's pick up the date. It was, September 2011. So we're going to switch to a daily chart, and we're going to go September 2011. All right. Here we go. Oh, what the fuck is that? Oh man, we've got a problem. Momentum is a little bit messy with this replay. I don't understand it. Oh man, it's laggy. I'm gonna try repainting it. Yeah, that's better. Just a glitch. So, yes, September 2011, we're here, alright, and we need a goddamn signal. So we need the strategy signal. We're overloaded, but look at that, we broke through the context. So no way, there's no way you can take a trade out of this. All right, it starts to get interesting. We do have our contexts, so let's move up a bit. All right, here we go. I would say it starts to get interesting. Yes, here we got something getting closer to a target. This, you would buy this target highs closed if we get there. All right, there you got the signal. You need to wait for the blue triangle. There you got it. All right, blue triangle. Here is where you buy. Damn, bang. So buying entry. All right, you get to buy entry. Remember that the size of the stop loss must be, if you don't know where to put it, you take the trend channel size, and in here it would be like that, all right, and this is your stop loss, all right, this trend channel size, and as in here I would recommend you to put it below the previous low. I would say, all right, this is your stop loss, all right, these things you trade that just like it would be in a range, all right, which means obviously you're going to secure the trade in here, all right. There's a risk management. You're still in a range. Remember that the trend emerges out of the breakout, so the accumulation has to be managed just like you would do for a trending range trade, all right, which means you bought in here and you apply the trending range rules, all right. Like the next step is for you to reach out to the trend channel. The validation, the confirmation will be reaching out to the opposite context boundaries and stuff like that, all right. On those trades, just because you're looking forward for a trend in the higher time frame context, you don't use the validation. You follow the range, the trending range, all right. You follow this process to risk manage this open position, which is an accumulation position. You're going to forget about this. You don't validate. You will confirm the trade and eventually take the partial profit if you want to or not. All right, that depends on you. You can just move the stop loss, and it means when you're reaching the opposite side of the context. So that's how I teach. I would do personally. Like this trade, you'll risk manage it whenever it reaches out to the opposite context. So this will be your first risk management. So first target. All right. Getting in here, you do whatever the fuck you want. Either you partial profit take, you pay for your stop loss, but you reduce the stop loss sizing, all right? You do any way you can reduce the stop loss, but you at least do something in this area, all right? So let's see how this went. Close to, but not yet, all right? The context channel is getting lower. All right, there we go. It took quite a long, see, and we retraced down to our entry price. So if you were in there and you said, all right, we don't feel the rule, but who gives a shit? I'm putting my stop loss at break even. Then guess what? You're fucked. You're stop lossed right in here at the lowest point, and the market is validating you just after. So that's a shame. Remember that. You don't go too fast. You stay with your stop loss set in here. It must be obviously below this target. That's absolutely necessary. All right, so that will be stop loss, first target. So yes, now you can put the goddamn stop loss at break even. That's fine. All right. So in here, your trade is now secured. So what do? You get back to your goddamn weekly chart. All right, you've done your accumulation. The trade has been secured. Either you took 25% profit, or generally I suggest you take it entirely ahead of the weekly context, which means you just reduce the stop loss and do nothing else. All right, so you've been secured at this stage. What is the next step in your process? You've been forecasting the accumulation. It worked pretty fine, right? It isn't that bad. Now breakout, which means you assess that you're there. You don't know yet. You'll know it when you'll get the breakout. So the breakout needs to break out of the accumulation. You need to break out through both context and trend channel, and you need to have volume and a target possibly. The target isn't mandatory, like sometimes the target won't be there, don't mind it. All we care about is that you clearly candle close through the trend channel, the context channel, that you're breaking a trend line and you're breaking out of the accumulation area. Let's get back to the chart, sorry. So what you do now is that you took your accumulation trade, the stop is at break even. So what is your current mindset? All right, your current mindset is, fuck it, my trade is secured, so what the hell would I look at prices? All I care about right now is for us to break through the goddamn resistant context. So we go ahead, and as long as we don't get to the resistant context, there's nothing we give a shit about. As you can see, it takes a huge amount of time. Oh, we're getting close. No, not yet. All right, getting close, close, close. Nah, yes. All right. Blue candle closing outside of both context and trend channel. All right. Here you get the cross. You get it right. Here is your goddamn breakout trade. All right. So in here is where you take your breakout trade. Okay, so I would say buy entry is easier for me to manage. Well, anyway, so in this thing, how do you do? This is an entry, so you're gonna have to manage this entry sizing. What you care about is just one rule. You want to have a stop loss that is below the previous low. That's the general consensus. All right, so we would like to have a stop loss in here. All right. What you're going to be doing is that you're going to size the position in here to reinvest all your gains, which means that anyway, what you want is to have your average entry price, all right, close to the stop loss, all right, which means in here, in this case, all right, the average price is slightly closer to this one, which means this position sizing can be a little bit higher than this one. Like if you took one contract in here, you can take 1.5 contract there. It will give you an average entry price in here, and you'll find. But your stop loss needs to be set out of the previous lows, all right, preferably. There, the breakout is there. You don't know for sure. All you know is that normally out of this, a trend will emerge, which means we'll have a one side direction trade. The trend channel will narrow and will stick trading into the resistant context and breaking through it. All right, so let's move on. All right, it's hesitating a bit. All right, here we get it. Nicely breaking through. You'll see the trend channel is accelerating. We're stuck into the resistant context. The trend channel is narrowing. We definitely have a trend setting itself. All right. So here you can say, fine, the trend is confirming. We crossed over the trend, the breakout target. So yes, there is clearly a trend in here. So we can say, all right, now the breakout phase. Right. This is validated, so we obviously had an accumulation, stuff like that. What is the next step? What is the mindset that you need to have? You wait for the price to diverge, right? So you get back into pricing in here, and as long as you're making higher highs on the momentum, you don't give a shit. And as long as you don't make lower lows, you don't give a shit as well. So at that moment, the only thing you have a look at is this, all right? So you put an alert in there. I give you the tips. That's how you trade those stuff, right? You put an alert in there, and you put an alert in there. All right, the previous market top. When you get to break this, you know, all right, it's probably going to stop. So we go up here, all right, fine. Oh, all right, not yet. Only with candle closes. Not yet. Not yet. I'm only looking at the momentum right now. I'm not even looking at prices. All right, this has been triggered in here. So at this moment, you know that the momentum has made a lower close. It is not even lower. It's almost the same one. All right. So at this moment, generally, you know the price will start divergence. You can see this because we're making new highs, but not with the momentum, and the momentum is starting to show some weakness signs. At this stage, you can start looking forward for the divergence. So we're gonna go slowly right now. All right. Not ending the candle close. We need to have a goddamn signal with a candle close and a triangle. Nothing, nothing. All right, here you got something. It's starting to be interesting, but do you see a signal? Nothing. So you let it go. All right, come on. All right. Gonna give me something? Nope. Oh, it's getting interesting. We pulled back to the trend channel. So we broke the trend channel. It was pretty fucking narrow, but we didn't nearly got to 50% context, all right? So this isn't the pullback, all right? Remember that we're always thinking about the steps. At some point, you'll miss the divergence, but you knew the divergence occurs because you get the pullback. Now, what are the pullback rules? All right, you need to pull back to the trend channel and get to at least 50% context, which means we didn't in here. We just pull back to the trend channel without reaching 50% context. So this is not our pullback. This is probably the pullback of a shorter time frame trade, all right, like a daily trend. There was a daily trend sending itself in here as well, and this is where it made its pullback actually. So we keep on going further in time. All right, as you can see, divergence. So it's definitely all right. There you got a target in here for the divergence. That's interesting. You know this area is of interest. Still waiting for a goddamn signal. I'm gonna get it. Alright, here we got it. We've got a overload cluster right to the target. We would need a confirmation, obviously, but I would say if this whole... Alright, here we go. This is where you do your divergence risk management. Alright, so here is your first target, the divergence target. Alright, at the stage, as you profit took, you can also, of course, rise the stop loss or let it go, or whatever. That's up to you. All you care about right now is to wait for the next step, which is the goddamn pullback. Right? So what is the pullback rule? What is the mindset you have at this stage? Remember that the process is simple. All right? Either you get to make your pullback and you fulfill your pullback conditions, or you don't, or you reach out to your stop loss. I'll make you the decision the decision process afterwards as well. So you get in here, you've done your first risk management, you're looking for the pullback. We need to get to at least 50% context. We need to be at least retracing 23% as well. That's a trading entry. Remember that we're buying the pullback, so it needs at least 23% retracement. I'm going to use the automatic replay. Some voting clicking like a Don Basso. All right. I'm getting close to 23% retracement, but still not yet. We need to be there, right? All right, here we go. That's the 23% Fibonacci retracement, all right? we're trading at the context, at the trend channel, okay. Do we have a trending context, a colored signal plus a triangle? That is not a colored signal. That is a gray signal, but in this context, I would say, all right, go ahead with that. That's not that bad. I would take that anyway. So at least it says the bears are profit taking. So the bears are getting out. Let's get in. All right. It's a little bit risky. It's not a 100% perfect trade, but that's fine. We're clearly below 50% context as we reached out to the support context in this case scenario. All right, we do have the range signal. So yes, everything suggests we do have our pullback in here. So all right, let's get in. That's the third entry. All right, your buying entry. All right, normally you're supposed to wait for a triangle. Sorry about that. So let's wait for the goddamn triangle. All right, there you got it. It's right behind the, all right, so the triangle's there, all right, so there is your pullback entry. So third entry in a trend, that's what you do. Accumulation, if you can see this, breakouts and pullback are the only trades you make, and true risk management coming along the way, which is the divergence and the final excess. So now what the final excess rules are, simple as that. You get back to the resisting context, you have possibly some breakouts and stuff like that, and you break through the context. So what do we care about? We just took this trade, still a binary choice. Either the market will take down your stop loss. Normally at this stage your average entry price have been rising, you took another entry, so you obviously move the stop loss accordingly. Right? The bigger the position sizing you take in here, the higher will be the average entry price. Right? So if you take a big position in here, it's going to rise your long price, all right, your average price. I'm fine with that. Once again, all I care about is that you put it safely, at least not always below a Fibonacci. So you're trading the 23, make it below the 38. If you're trading the 38% Fibonacci retracement, put your stop loss below the 50, not at the 50, below it. That's important, all right. So in here, that would be a decent price for a stop loss, all right. And you clearly have very few chances to get to be down this price, right? As the bullish trend is setting itself, the bulls are getting out. Normally, the bears are getting out. Normally, the bulls will take it over. So either the market will go there, or we will go back to resistant context, and you're going to take a gain, right? So you go there, all right, all right, all right. Come on, come on up, come on up, come on up. All right, we're back in the resistant context. So the pullback is validated. In here, normally, you can rise your stop loss, all right? We're going final excess, so I suggest at this time, it is about time for you to put the stop loss in here. It's a stop win, which means at this time, if you miss the final excess, you'll at least have a gain in this trade. Guaranteed gain. You've been trading this trend. It was long. It was painful. It was really long. So you need to be rewarded. At this stage, you're back in the resistant context. You're looking for bearish signals to get to profit take. All right, and that will be your second risk taking, or your second risk managing. All right, will be your target max. All right, so you go there. You let it go. Still no bearish signal. We need to break through the resistant context, all right? So we're not getting in there. All right, here we go. We're on top of the resistant context. We do have a target. Still, this signal wouldn't be enough to me, all right? So we keep on going. All right, how does this look like? Are we going to get a signal? All right, we're getting to the target. All right. Personally, I will profit take right in here, not even asking any fucking question. That's exactly what I've done. That's where I started selling Wall Street. Because normally when we get to those targets with such a crazy momentum, generally means, all right, we're out. That's where we should have terminated this trend in a normal market behavior. But there was Trump, and Trump basically changed the market, you know, the new paradigm, whatever. So this is what happened afterwards. All right, we reversed out of this target. I started selling Wall Street. Wall Street took me a stop loss. I started selling again this other bearish signal that showed up right after. All right, this one. All right, I had a beautiful divergent momentum, a red arrow, stuff like that. I was confident that we would fuck up this market at this stage, and no, we didn't. We went to this ugly, dangerous bubble that Trump is creating. and that's obviously abnormal. But in a normal trending condition, you would have took your entire profit taking right in here. All right. So that's how you risk managing trends. Always assess that you don't know what the hell's happening in a trend. All you need to know is using those rules to know what you might be the most likely going to be most likely trading at the current stage. So how does it look like? I'm going to give you this same old decision-making process. So we start with the trading entry, which is the accumulation. All right, so it's a mature range, so you look out for an accumulation. So from the mature range, you're expecting the accumulation to sell itself. It's always speculative. You don't know, all right? Is it going to be an accumulation? So anytime you go from one context back to its trend channel, you're going to look forward for potential entries on the shorter time frame, and you're going to hope for confirmations in the major time frame, which, oh, sorry, not this. All right, so remember what we've done. We got to the daily chart to look out for a signal in here, and you need, when you go back to the weekly charts, to see those blue signals. There will be a confirmation that there is actually something happening in here in the weekly chart as well. You're taking daily chart trade, but you're going to manage these trades in a weekly chart afterwards, because you're going to build a trend out of this. Right? I hope you understand that. It might be unclear to some of you, but still, I'm doing my best. So, mature range gets to an accumulation. When you took the accumulation trade, it's simple as that. It's a binary choice. All right, either you're going to be stopped, or you're going to get to the breakout. All right, so you can validate the accumulation only when you get to the breakout, right? You don't know for sure that the accumulation is working if there is no breakout. Whenever the breakout shows up is where you get to the actual trending context, all right? Accumulation is speculative. Breakout is where you can be leveraged, which means if you've got 10K on your account, you'll be able to buy more than 10K of this asset. You can be leveraged using leverage from your account sizing. Obviously, you don't do this on volatile assets like the cryptos or whatever this is. Those things can move 50% a day, so not 50, but let's say 15 without a problem. So that's not how you do stuff, all right? You don't want to have your account moving 15% in a day. So obviously, volatile asset, no leverage, but low volatile assets just like the SPX, you can use leverage. It's just going to bring up some more gain. All right, so this is your trending context. This is where you know you're trending. Then, once you got your breakout, what the hell happens? It's still the same stuff, all right? You're going to get a binary choice. All right, after the breakout, either the market will invalidate, which means it will pull back and invalidate the breakout. Fake breakout, you're going to be stopped out, normally without losses or with a tiny loss. The next step is the divergence. All right. We also have a third option in here. All right. From time to time, you'll go from breakout, you'll miss out the divergence. All right. So it's a missed divergence, and you'll go straight to the next point, which means, oh, sorry. All right. Sometimes you'll miss the divergence, but you'll figure out that there was a divergence in between because you ended up with a pullback. Right? That you need to understand that. All right. From time to time, there will be a shortcut coming from this one to this one, and you'll miss the divergence. You won't trade this. You won't take this risk management simply because you see the pullback and you say, all right, I missed the divergence. No problem with that. All right. So when you get to the divergence, there is no stop loss, or there could be a stop loss, obviously. All right. There could be. But normally there isn't. You're going to always have the pullback signal first, and this is when the pullback will get out of control that eventually you'll end up being stopped or getting to the final excess. In here, it always has to be a stop win, which means, all right, getting in here anytime you see the pullback after the breakout, which means even if you saw the divergence of missed it, at this point, it can only be a winning trade. all right? Cannot take losses when you get to pullback stages, okay? And final excesses is where you profit take, pure and simply, and this is where you get the maximum gain. All right. So the decision-making process is a little bit more complex when it goes to trending. But anyway, I still have some projects for the future. I'll eventually work out with an MT4 robot that will help you risk managing, which means it's a robot that will take care of this for itself. It will still require you to work it out, which means this is not a 100% automated robot. You know how I think about those stuff. So this is going to be a robot that will manage the risk for you. So you'll tell him what the fuck to do. Just it's going to be a simple thing. Like the robot will have probably a few inputs, so probably a little bit more than that. But I'll just give you the glimpse of what this could be looking like. All right, I'm working on it. That's the project. So it's something that isn't going to be released until next year. It requires a shit ton of development to get there. Probably going to have to use some friends to help me out there. And I certainly will. But the thing is that, yes, this will probably look like that. The robot will tell you, all right, what the fuck do you think is a context? All right. Once again, you're good at it. You're far better than any robot will ever be at identifying context. Is this a trend? Is this a range? Is this a bubble? Or at least, what do you fucking want to trade? You need to know that, all right? So it will be direction. Do you want to buy? Do you want to sell? All right? What's your fucking feeling about this market? Like, once again, you need to have a conviction. You don't say, I don't know, I want to take everything that shows up. No, that's not how it works. You want to buy or you want to sell. I don't care if you agree with me or not. That's just your personal convictions. You need to know what the fuck you want to be doing. What is the preferred direction? Buying, selling. There will be no option for buy and sell. All right? So the direction, the context that you're into, the risk, in percentage capital and stuff like that. I'll put you some further options. So percentage capital, dollars, so money. All right, there will be multiple options to risk manage. I'll invite you most of the time to use percentage capital. Like I generally tell you, you risk 1%, 2%, stuff like that. All right, and there will be a capping, which means whether you like it or not, this robot will never allow you to use leverage, which means it will be capped to 5%. So you want to use my tools, you play by the rules. If you think I'm going to allow you to use leverage, you're going to be proven wrong. So risk is always going to be capped to 5% anyway. Then you're gonna get profile. All right, risk profile. All right, remember that the risk profile is this. All right, low risk, moderate, aggressive, very aggressive. Simply because the robot will trade differently according to what you tell him to do, because it will risk manage differently according to different risk management aggressiveness. Simple as that. That's how the robot will work. It's not going to be complicated, but believe me, it's going to be a pain in the ass to cut that shit. So it's going to take me quite some time. I still don't know if I'm going to make it. I'm probably going to make this one for MT5 or MT4 platforms, because I think these are the most available platform. Not necessarily the best one. Once again, I hate MT4 and MT5. I feel like trading into Windows 98. So it's pretty much like old school, but still, these are the platforms that most, not to say every broker, is offering. So every broker gives you the ability to trade with MT4 and MT5, and this is the reason why that's probably in this language that I'll be coding this stuff. So that's just a further project, and that doesn't nearly mean that you have to wait for it and say, you know what, Phil is going to be doing this, so why the fuck would I be learning risk management until then, in between? I'm just going to wait for this algorithm to show up and that will be easy. No, that's not the goal. Once again, these algos will be meant to help you, and you can be damn sure about one thing. I'm not going to give this algorithm to beginners. I'm going to give this algorithm to guys who know how to use the strategy, so it's going to be for greens, for yellow guys, or orange guys in the Discord. But the white guys, I'm sorry you won't have access to this, because I want you to goddamn learn how to do it on your own. That's really important, because that's a mind process that is absolutely necessary. If I give you the tool to do it automatically, you just say, all right, I don't need to do it. So you'll simply think about easy gains without nearly understanding what the fuck is going on. So that's not going to work like that. If you think I'm going to make the world easy for you, I'm not. I'm just here to help you understanding how risk functions, how you can profit from it, and then I'm going to use those tools to help you maximize the profit when you understood how this shit works. But if you think it's easy, that you can be a profitable trader in 2 months, then goddamn don't. That's not possible. That's not how it works. Put your hands on the dirt, take some losses, learn from those losses, grow yourselves. That's absolutely necessary to grow yourselves from errors. And only then I'll provide such kinds of tools for, like, there's probably going to be a 6-month cap. Like, if you're just new and you haven't been trading 6 months with my tool, I'm not even going to provide you this automated strategy. And once again, it's not an automated strategy, it's going to be a semi-automated strategy, just a tool to help you being more profitable. All right? So it's no teasing. I'll do it, that's a certainty. I just don't know when. It's just because it's appropriate to the topic we're talking about today. So don't message me like 2 weeks from now to tell me, all right, Phil, where are you with the algo? I mean, the algorithm is probably going to take me at least 6 months to a year to get to make it work, because it's a shit problem to code. It's going to be complex. I'm going to need to optimize the stuff. I'm going to need to backtest. I'm going to need to work a lot around this project. All right, so don't be overexcited. It's just something I've been working on, and I'm already thinking about it for quite a long time, and I was just looking out for the right person to make it work and to make it to help me, because I'm not going to be able to make it on my own. Now, most of my day is helping you guys. Oh man. All right, that's the end of this video. I think that's the message. See you guys later.